What's going on, everybody? Stas here. Welcome back to another video. So Robinhood got absolutely slammed by the SEC. They got fined $65 million. And in today's video, we're going to be going over that document, that lawsuit, going over why they got fined $65 million. And we're also going to be going over my opinion about Robinhood and whether or not I still think it's a good brokerage to use as a beginner in the year of 2020 heading into 2021. So if you guys find value, hit the like button, subscribe to the channel, and make sure to claim your 4 free stocks from WeBull down below, not Robinhood, from WeBull down below, which are valued up to $1,600. And let's get right into the video. So what you see right here, this is the document, the lawsuit, whatever you want to call it. We see here, United States of America before the SEC in the matter of Robinhood Financial LLC, the respondent. And if we go down to number 1 right here, the introduction, what we see is this matter involves material misrepresentations and omissions by Robinhood relating to its revenue sources, specifically its receipt of payments from certain principal trading firms, also known as electronic market makers, for routing Robinhood customer orders to them and relating to certain statements about the execution quality Robinhood achieved for its customers' orders. It also involves Robinhood's failure to satisfy its duty of best execution. So that's pretty much the basis of all of this, and we'll go deeper into it here in a second, but Robinhood's really misleading people on how they make money. Well, they did in the past, right? Not so much anymore. And they're not really getting the best order execution quality for their customers, which if you're a trader and you're moving some pretty decent sized money, you need to get in at a specific price point. And if you don't get in that price point, you're not going to execute on your specific trade the way that you want to. So it's not the best here. It's not the best look for Robinhood that they're actually taking a bit of a shortcut on execution quality. And number 2, you guys can see here, Robinhood launched its retail brokerage business in 2015. By mid-2018, it was one of the largest retail broker dealers in the U.S. One of Robinhood's primary selling points, take a look here, guys, was that it did not charge its customers trading commissions. In reality, however, commission-free trading, quote-unquote, with Robinhood came with a catch. Robinhood's customers received inferior execution prices compared to what they would have received from Robinhood's competitors. For larger value orders, this price difference at Robinhood exceeded the commission its competitors would have charged. So what that pretty much means is if you're moving large money, like we mentioned a minute ago, let's say you're trading with 10,000, 15,000, we're not talking about millions of dollars here, but let's say you're trading with 20,000, 30,000, whatever, you would have been better off paying commissions with other brokerages rather than receiving the inferior execution from Robinhood due to that price difference we were talking about before, right? Because traders, they want to get in at specific price points. So with Robinhood, they're being a bit shady about their execution, right? You might not get the best price. You're better off paying the commission, let's say with Fidelity at the time, which did charge for trading, if that makes any sense, right? For larger value orders, this price difference at Robinhood exceeded the commission its competitors would have charged, like I just said, and these inferior prices were caused in large part by the unusually high amounts Robinhood charged the principal trading firms for the opportunity to obtain Robinhood's customer order flow. These payments are generally referred to as payment for order flow, and that's how Robinhood makes money at the end of the day, right? That is how they make money. They sell your order flow, they sell your data, the orders, the buys, the sells that you're making to these different trading firms, in this case principal trading firms, which we'll get into later on in this video. And you guys can see here from 2015 through September 2018, certain of Robinhood's retail communications omitted its receipt of payment for order flow. Since Robinhood's launch, payment for order flow has been Robinhood's single largest source of revenue, and Robinhood's customer agreements and trade confirmations stated it may, quote unquote, receive payment for order flow, and Robinhood disclosed certain information about those payments as required in its SEC-mandated Rule 606 reports. However, in frequently asked questions, FAQs, on its website describing how it made money, and in certain communications with customers addressing the same issue, Robinhood omitted payment for order flow when it described its revenue sources because it believed that payment for order flow might be viewed as controversial by customers. That is the kicker here, guys. And again, that is how they make money, payment for order flow. And get this, guys, this is crazy. Robinhood also instructed its customer service representatives not to mention payment for order flow in responding to questions about Robinhood's sources of revenue. So yeah, I mean, between 2015, 2018, guys, they were not telling people, not being honest. They were getting inferior execution order quality for the customers, and I'm not the biggest fan of that, quite honestly. And I've experienced this myself. I'm sure you guys have as well. Let me know in the comments if you have. Robinhood's order quality, when you're actually putting in limit orders, market orders, whatever, you don't get filled a lot of the time. They're not the best quality orders. I mean, you don't get filled at the price you want to get in. It's a bit choppy and not related to order quality. I mean, we've seen Robinhood's platform go down many times in the past couple of months. It's literally shut down, and people weren't able to trade on some of the highest volatility days out there, highly volatile days out there. And I mean, this is not the best look for Robinhood. And again, I'll link this down below if you guys do want to dive deeper into this document, but let's keep on going. Let's keep on reading and see what else we got to dig up. So as a broker-dealer that routed customers' orders for execution, Robinhood had a duty to seek to obtain the best reasonably available terms for customers' orders. This duty is referred to as the duty of best execution. From September 2016 through June 2019, while Robinhood was on notice that its high payment for order flow rates from principal trading firms could result in inferior execution prices for its customers, Robinhood violated, let me say that again, Robinhood violated its duty of best execution by failing to conduct adequate, regular, and rigorous reviews of the execution quality it was providing on customers' orders. Robinhood did not begin comparing its execution quality to that of its competitors until October 2018 and did not take appropriate steps during the entire period to assess whether its higher payment for order flow rates were adversely affecting customer execution prices. So I'm viewing this as, hey, Robinhood was stacking up all of this money from these trading firms, selling the order flows, and they didn't care about the customer execution, right? That was on the back burner, right? They're just looking to rack up this money, and they're giving their customers an inferior product compared to, let's say, other firms like Fidelity, TD Ameritrade, E-Trade, and so forth, right? So that's really the basis of this, and we'll talk a little bit more now about the principal trading firms and the payment for order flow, but that's really it. I mean, Robinhood wasn't being honest with how they were making money, with how inferior their execution quality was to competitors like I've mentioned, Fidelity, TD, E-Trade, whatever. And that's a bit worrisome. And I get it. They're an early company. They're still in the early stages compared to those big boys that we just mentioned. And they're still trying to figure things out. But still, it's not the best look here that they're trying to deceive people. I'm not trying to say they're malicious. They have malicious intent, but at the end of the day, they are deceiving people a little bit. And you can see here, I mean, rather than sending customer orders to buy or sell equity securities directly to national exchanges, Robinhood, like other retail broker-dealers, routed its orders to other broker-dealers, often known as, like I said before, principal trading firms or electronic market makers to either execute those orders or route them to other market centers. Principal trading firms attempt to profit from executing large volumes of retail buy and sell orders, either by taking the other side of customer orders and exiting the position at a profit, which is also known as internalization, or by routing the orders to other market centers. So there you go again. again, they could have sent it to, other exchanges, national exchanges for a cleaner order, but they sent it to principal trading firms. They made more money there, and then the principal trading firms, they flipped the order, made money on top of it. So there's a lot going on here. And on the bottom of that, you guys can see principal trading firms offer incentives to retail broker-dealers to send them order flow. One such incentive is payment for order flow, which is defined in Rule 10b, 10d8 of the Exchange Act to include any monetary payment, service, property, or other benefit that results in remuneration, compensation, or consideration to a broker-dealer in return for the routing of customer orders. So I'm not going to bore you guys too much longer. That is pretty much what is going on here. And again, I'll link this down below in the description box. And if you guys scroll down a little bit more, and again, there's a lot more to this, but you can see here, back in 2016, May 2016, Robinhood began negotiations with a number of principal trading firms about potentially routing Robinhood customer orders to those entities. In the course of these negotiations, certain of the principal trading firms told Robinhood that there was a trade-off between payment for order flow on the one hand and price improvement on the other. If Robinhood negotiated for higher payment for order flow revenue, according to the principal trading firms, there would be less money available for the principal trading firms to provide price improvement to Robinhood's customers. You guys see that? Seems like they're picking the profits over the customers there. And you can see here in 2016 September, Robinhood began routing customer orders directly and solely to principal trading firms. And meanwhile, you guys can see here in 2017, Robinhood developed a proprietary routing algorithm known as a smart order router designed to make the principal trading firms with which Robinhood had payment for order flow arrangements compete for order flow by routing customer orders to the principal trading firm that had provided the most price improvement for that stock over the prior 30 days. However, the smart order router did not address Robinhood's high payment for order flow rates or any potential execution prices that may be available at venues that did not agree to pay those rates. And even with its smart order router, Robinhood customer orders received poor execution quality. What do you know, guys? So a question here that I get all the time, should I use Robinhood as a beginner? And the truth is, if you're a beginner starting out with a small amount of money, and obviously small is relative to certain people, but let's say you have $500, $1,000, a couple $1,000, I think Robinhood is great. But once you start dealing with money over $50,000, $100,000, even $25,000, $30,000 plus, I think there's other brokerages, quite honestly, to go and to get better order flow execution or order execution and to just get better customer service in general. So if I'm a beginner, yeah, I'd use Robinhood, right? If I'm starting out, I don't know much, I want something simple, sure, Robinhood is great. But if I'm more advanced, intermediate, I would go places such as Fidelity, TD Ameritrade, and even something such as WeBull, which is coming up these days. And they're also pretty interesting when it comes to the platform, and I've had pretty good execution there with orders compared to Robinhood, better execution on WeBull compared to Robinhood. So yeah, check it out. I mean, if you're a beginner, go check out Robinhood. You don't have much to lose, and you'll gain some experience. So I'll wrap it up there, guys. I'll link this down below in the description box for anybody that wants to dive deeper into it. Again, it's pretty long. It took me about an hour to read through this, take some notes, and really digest it. So let me know your thoughts in the comments. Drop a like if you all enjoyed the video. Subscribe to the channel if you want to see daily stock market videos as well. And don't forget to claim your 4 free stocks from WeBull, not Robinhood, WeBull. Link down below in the description box. All you have to do is deposit $100 and you get 4 stocks valued up to $1,600. So I'll catch you all in the next video. Thanks for watching as always. Peace out.